Everybody, we are going to go ahead and get started. If anybody else pops in, we'll let them in. But again, our goal is to record everything that we're doing today. So there should be a recording that we'll be able to share with everybody once we get through everything.
Okay, let's get started. We have the agenda today. We're going to briefly introduce ourselves, what the beneficial ownership, we're going to introduce that to you. Who needs to file? What is substantial control? What happens if something changes in my report? And why you would like to partner with us.
Awesome. All right, so today y'all get to hear from me, Catherine, and Ann, and we're working together on this project. We found that ultimately this is going to be such a big and important thing that we decided to partner together with our firms to get all this information to you guys, our clients, and our networking referral partners as well, so that everybody kind of has an idea of, you know, what is involved, what do we need, what is the requirement, and then how can our firms be of service and help get that process done for you. So Cowart CPA, that's my firm, and Barraco Accounting, that's Ann's firm. We are collaborating to inform you guys of what are the requirements and how we can help. So Cowart CPA, my firm, specializes in innovative tax preparation, financial literacy, and business efficiency training tailored for modern entrepreneurs. Our goal is we are committed to providing our clients with the tools necessary for financial clarity and success.
And I'm Barraco Accounting. I'm led by Ann Barraco, which is me. And I offer meticulous accounting and strategic tax planning services, ensuring our clients navigate financial challenges with ease. Our focus is accuracy and proactive solutions to support your business growth and compliance. This webinar is going to be designed to inform our clients of the BOI reporting requirements and specifically our prep process. I do want to say that this is brand new, and that was part of the reason that we did want to partner together, because Catherine and I both did various professional developments and tag teamed it, and were able to go ahead and get a lot of different outside resources in order to make sure that we were doing the best processes for you. The purpose of this webinar is to inform you of the requirements for BOI filing. Our firm's process, this is not a how to file your BOI training session.
All right, so here's the real question. Why do I need to file? What is this? What's the point? Well, in 2021, Congress passed the Corporate Transparency Act, also known as CTA, on a bipartisan basis. This law created a new beneficial ownership information reporting requirement as a part of the U.S. government's effort to make it harder for bad actors to hide or benefit from ill-gotten gains through shell companies or other opaque structures. Beneficial ownership information, this refers to identifying information about the individuals who directly or indirectly own or control a company. So again, ultimately what they're trying to get is the information on a per entity basis of the individuals that ultimately own the business.
The important thing is, when do we need to file, or when do you need to file? So the FinCEN launched their BOI e-filing website to report the ownership information, which we included the link here, on January 1st, 2024. If you were created or registered to do business before January 1st, 2024, so you were in business, you had your Secretary of State filing in 2023, you are fine. You have until January 1st of 2025 to file the initial report. If you created a company this year in 2024, you have 90 calendar days after the date that the report was filed to receive or public notice that the creation or registration is effective. So you have 90 days to file. After 2024, because they are giving a grace period because it is a brand new policy and they do want to get the word out. But after 2025, so next year, if you create a new company, you will only have 30 calendar days to file after receiving the Secretary of State report. I do want to note that if we've had this question before, like if a house is not in an LLC and you own a rental real estate property that is not an LLC, that does not need a beneficial ownership filing report. That is only for an LLC, like a rental property that is in an LLC.
So again, I kind of want to also reiterate on the previous slide. You can go back.
Sure.
Yeah. As far as the reporting requirements go, okay, when we're talking about these dates, okay, these dates are very important. So if you're wondering when you created your business, the date that you are going to follow is that date that is on your articles of an organization, okay, from the state that you filed your business in. So that is the date to go off of, not any other date. So again, what companies will have to be required to report the beneficial ownership information? Which ones? So domestic reporting companies and foreign reporting companies are the different companies that are required. Now, what does that mean? So a domestic reporting company, this is any business that is formed within our country, okay? So these are going to be corporations, limited liability companies, LLCs, and any other entity created by the filing of a document with the Secretary of State anywhere in the United States. Okay, so this is, I created an LLC through the Secretary of State. I have an articles of organization with a date on it that is required to file. Foreign companies, these are including LLCs and corporations formed under the law of a foreign country that have registered to do business in the United States. So again, this registering to do business in the United States for a foreign company is what's going to trigger that requirement for BOI. So is a sole proprietorship a reporting company? Because that's the next question. What if I don't have an LLC? What if it's just me? So the short answer is no. Unless the sole proprietorship was created in the United States by filing a document with the Secretary of State, an entity is not required. So an entity is a reporting company only if it was created in the United States by filing with a Secretary of State, any state. So filing a document with a government agency to obtain an IRS EIN, a fictitious business name, or a professional or occupational license does not create an entity. And therefore, that means a sole proprietorship, filing a document like that doesn't require it. It is that Secretary of State organization document that makes that requirement. So yeah, who is a beneficial owner?
So a beneficial owner is an individual who directly or indirectly exercise substantial control over the reporting company. Those are your day-to-day individuals that are making sure the company runs, is operated. That's your CEO, your COO, or the owner of the company, and owns or controls at least 25% of the reporting company's ownership interest. So once again, this is the person that does the majority of the day-to-day management. So this would be the equivalent of your managing partner if you have a partnership. Because beneficial owners must be individuals, this is the biggest key. It's a natural person. This is not a trust, a corporation, or any other legal entity. They are not considered a beneficial owner. The key thing that the government wants is they want that individual that is responsible for the day-to-day operation to make sure that there's no ill-gotten goods or monies that are being done in that entity. That's what they're trying to do.
Yeah, so then the next question is, well, what is substantial control? So we're talking about at first the individuals that control and are owners of these businesses, but substantial control can go beyond just basic ownership. So there are three main ways that an individual can exercise substantial control over a reporting company. So the first one, the individual is a senior officer. So this could be the company's president, chief financial officer, general counsel, legal counsel, chief executive officer, chief operating officer, or any other officer who performs a similar function. So while you can hire somebody to be your CEO or to be your CFO, and they're not an owner in the business, they still have substantial control. So the second way, individual has authority to appoint or remove certain officers or a majority of directors of the reporting company. So that is a lot of power, okay? If your business has that kind of power, someone with that level of power, then they have substantial control over the entity. And then the last one, the individual is an important decision maker for the reporting company. That's kind of your catch-all. If they can make powerful decisions about the direction that the business is headed or anything to that level, then they are an individual with substantial control.
This would basically be the manager that drives the bus at the end of the day. So if you decide that you have multiple individuals that have substantial control, because I'm sure that there are partners out there that they truly try to operate in a 50-50 environment, that's when it's important for you to reach out to either one of us, and we will go through to make sure that we can assist you in correctly filing your BOI report.
So what should I do if previously reported information changes? If you have changes or an incorrect filing, something is wrong, you have 30 days after the change, okay? So, and that involves, the general information about the company, the reporting entity information, and it also could be the individual's beneficial ownership information, 30 days from when a change occurred. So if there's a new person that needs to be reported, somebody new has control. As soon as that happens, 30 days from that date, your entity, its information changes, address changes, anything like that, from the date that that change happens, 30 days.
It's also important to note that when we originally file, you're going to have to provide an ID. And if that ID expires and you get a new ID, then that will trigger another change because it will have to be resubmitted so that the current ID is on file. What happens if a reporting company does not report beneficial ownership information to FinCEN or fails to update or correct the information required? So FinCEN is working hard to ensure the reporting companies are aware of their obligations, report, update, correct beneficial ownership information. FinCEN understands that it is a new requirement, and if you correct a mistake or omission within 90 days of the deadline of the original report, so they are giving us a 90-day correction, grace period, you can avoid and not necessarily be penalized. However, you can face civil and criminal penalties if you disregard this new legal requirement to report your beneficial ownership information.
So another thing to note here, again, that's 90 days from when the original report should have been filed. If you're filing late, there may not be a statute of limitations on that. So if your original report was filed late, it's still, you should have made these changes, the correction, 90 days after the original deadline. So what penalties do individuals face for violating any reporting requirements? Well, this is probably the biggest reason why we're here doing this webinar. We want to make sure that everyone is well informed of what all is involved in this. And unfortunately, a part of that is some pretty steep penalties. So as specified in the CTA, a person who willingly violates the BOI reporting requirements may be subject to civil penalties of up to $500 for each day that the violation continues. However, the civil penalty amount is adjusted annually for inflation. So they can, change that periodically. So it's not going to always be a set number. So right now at this moment, the amount is $591. A person who willfully violates the reporting requirements may also be subject to criminal penalties of up to 2 years imprisonment and a fine of up to $10,000. That is a lot, and it is scary. And we don't want to get caught in this, and we don't want our clients to get caught in a situation. So we have streamlined this process because we want to make sure that we can help and be a part of the solution.
Is a reporting company responsible for ensuring the accuracy of the information it reports to FinCEN, even if the reporting company obtains that information from another party? Yes. You are the responsible party that you need to provide this information. So while we'll partner with you, you will have to provide your identity, it's a beneficial ownership, company applicants, and to report these individuals to FinCEN. At the time the filing is made, each reporting company is required to certify that its reporter or applicant is true, correct, and complete. According to FinCEN, it expects the reporting companies will take care to verify the information they receive from the form. So we will be providing you, once we partner with you, you will be providing us information. We will review it. We will ensure and come back to you if there's any questions for accuracy. And you will be reviewing and signing off on the final report that we will be providing to FinCEN on your behalf.
And I want to say just a couple of examples here of what this can kind of look like. That ultimate responsibility, like when you sign your tax return, the taxpayer, whoever is signing the return, it's their return, has the ultimate responsibility. In this situation, it's the reporting entity. So it is that entity, that LLC. And if the LLC is owned by another LLC, it's not that one, it's that LLC, that corporation that has that ultimate responsibility, not necessarily even the beneficial owner. Now, if an individual owns that business, then that kind of ends up being their responsibility. But if you have a beneficial owner or somebody who has substantial control and they didn't get you your information, the entity is still responsible, not that person. So it's very important at the entity level to make sure you have all the information for this. And also another side of things, when we're asking here, is a reporting company responsible even if they get the information from another party? Absolutely. And a big part of, here's an example. Okay. If let's say you're obtaining information from your payroll company, and that's what you're using to get a lot of the information for submitting. The payroll companies at the end of the day, never going to be responsible for this. Same goes with your CPA, us. If you're using information that came from us, it doesn't matter because the reporting entity in and of itself is ultimately responsible.
But we're here to be your second set of eyes to make sure that you are in compliance and that everything is filed to our understanding and our information to the best of our abilities, accurate.
So what information will a reporting company have to report about itself? So as your partner in filing, we will walk you through everything. If we are working together on engagement to get your reporting done, we have created processes that will streamline this information and help us be able to get this information from you as accurately as possible. And then we can meet the requirements.
So a little bit about our process. Everybody should be familiar with TaxDome, and that's going to be our process to do this. We are going to be sending out next week an eligibility organizer, because a lot of y'all might own multiple LLCs, multiple entity. And yes, every single LLC will have its own beneficial ownership information form that will be required. So if you own 3 LLCs, 3 different reports. If you own 3 partnerships with the Secretary of State or 3 corporations or whatever mix, it could be 2 partnerships, 1 corporation, and it doesn't necessarily have to be 3. You could have 10. Every single one of them will need to file a report. So the first line of defense that we're going to send out is going to say, hey, how many entities do you actually own? Or what entities do you need to file? Because once again, if you think that, you own a home and it's not an LLC, we will be able to spot check that and say, okay, we don't need to file it. Or if you make jewelry on the side and you never filed with the Secretary of State and you just have a Schedule C that is created, that's fine. As Catherine said earlier, even with an EIN, that does not mean that you have to file this.
And I kind of want to say also, as far as what entities are we talking about when we're talking about completing this? So this is going to be something that we're going to send out to everyone. We want to make sure that we catch everything. And it could very much so be you look at it and you're like, okay, I don't have any. You just answer that and we call it a day and we're good. We're sending it out to everyone to do our due diligence to help make sure, because those are really steep penalties. We really don't want anybody to have to deal with that. So that's why we're going to be sending it out to everyone. We want to make sure everyone is informed as our due diligence responsibility. We want to make sure everyone knows to our best ability. And then to take it a step further, when we're talking about this organizer, this is going to be sent at the entity account level. So when I say account level in TaxDome, if you are, married filing jointly with your spouse and you have an account with your spouse, that's both of you. If you have any LLCs that go into your tax return. So kind of think of it in the tax return basis. So if they go into your tax return, Schedule C, anything like that, Schedule E, Schedule F, all those. If it goes directly into your return, doesn't have its own tax return, doesn't have its own account, TaxDome account, then it's in there. So if you own 2 LLCs and your spouse owns 3, the answer is 5. It is going to be for that level, that header level in TaxDome that we're looking at. So let's say we're not talking about an individual anymore. Let's say we're talking about an LLC with multiple members or partners, okay, like an S Corp or a partnership. So at that point, we're talking about those pass-through entities. So while they pass through onto your tax return, they do that through a pass-through return. At that point, that is just for those entities, those LLCs, and any that are in them, consolidated into them. So if you have an S Corp LLC and it owns another LLC, that one is going to put 2. If you're a person that owns that S Corp, you're not going to count it because it's already counted in the other section. So we want to make sure this is probably the most important thing for our prep process to understand. And of course, if you have any questions on this, reach out, because we want to make sure that we catch everything. Okay. This was the best way to streamline and initially get that information. But ultimately, if you're not sure, please reach out. We want to make sure and do it before you hit complete. Okay. Before you hit complete, if you're not sure, reach out, because we want to make sure that we catch everything for you.
And
yeah.
So the first organizer is BOI goes out. How many entities do I have to file? Do I have 5? Do I have 10? Do I have 3?
Or 0.
Or 0, correct. Yeah. And if there are no entities, then that's fine. So then you will not get the second organizer. That's it. You're done. You can move on. We will then send out a second organizer.
First, we'll send the engagement letter. So after the quantity one, okay? So let's say at end of the game, no, none of them, you don't need it. Okay. Once you complete that, we will review it and then we'll clear you out the system for that year. We know you're good. But if you do have BOIs, then we're going to send out our engagement letter and deposit invoice similar to the tax prep process. This is going to be based on, that's why it's very important to get that quantity in, right? Because otherwise, there's going to be a lot of confusion later on with the billing and we'll get into what all that looks like later in the next slide. But we want to make sure we catch everything in there. The engagement letter, again, is going to be for that TaxDome account, okay? That married filing jointly person, that S Corp, okay? So the header account, whatever account you're logged into, make sure you're looking, especially if you have multiple ones you toggle between, okay? Because it's very important. And then after that engagement letter and deposit invoice, remember, very similar to the tax prep process, that is when we'll get into what Ann just mentioned, sending out the next organizer.
Correct. So the next organizer is going to come out. So you possibly could have one. So once again, if you end up having none, then you will not get the second organizer. The second organizer will go out, and we will push one out for each entity. So if you say 5, you are going to have 5 different organizers, and it's going to be on that LLC level, that partnership, that corp, that S corp. Once again, multiple LLCs might have multiple different addresses. This cannot just be filled in and copied and paste. You need to make sure and verify, because once again, you are in charge of making sure that this is correctly filed, that the address is correct, that the beneficial owner is correct, that anything that is uploaded, your driver's license, your passport, which will have to be uploaded in there, is done correctly. And if it's a husband and wife, maybe the wife is more substantial, has a substantial ownership versus the husband, and they have 2 LLCs. You have to make sure that you fill it out correctly so that the husband is the husband and the wife is the wife. It's not vice versa. So that's very key, that whatever that entity's name is matches the correct information.
And again, if you have any questions going through it, reach out. This isn't designed to be a process where you're completely on your own, just having to fill out this information. We can walk through that, whatever is needed, whatever helps us make sure that we've got all the right information.
Right, because this can be confusing. And Catherine and I spent a lot of time and a lot of effort researching this so that we can be your partner to make sure that this is done accurately and timely. So once we get the organizer, we're going to review the documents and we're going to request any missing documents. So once again, I keep mentioning that driver's license, that passport, that is going to have, that is a requirement. So if it ends up being faded and we can't see it, or it's going to be expiring soon, that might be something that we have to reach out to you and say, we're missing documents. Or if you end up, once again, uploading your wife's driver's license and it's really the husband's LLC, that's not something that we can take. We have to have accurate information. So once we have all that docs and we review them, we will then prepare the filing.
And we essentially modeled this whole process, of course, with tweaks off of the tax prep process. So none of this should seem foreign at all. Again, so like we have organizers. Once we get the information, then we prepare the filing. We're going to send that through our review process in TaxDome, where you hit approve or disapprove for each one. Okay, so remember, everything's going to be individualized. All right, if you married, filing jointly, you got those 5 LLCs between the 2 spouses, there will be a document to approve for each of those. And then once that's approved, then same process as the tax prep process. We'll send any additional billing if needed, and a signature form. So now the question is, what's the signature form? So this is something that we customize and we created custom to, again, be our final point, our final catch-all, because we want to make sure that we've got everything. So this is where you get to look through everything, look again, double check, make sure you didn't forget about the LLC that you opened 3 years ago and you haven't played with. We want to make sure that we don't miss anything. Then you sign the form saying, yes, everything's in there. Yes, I gave you all the right information. Yes, I know what my responsibilities are. Don't worry, they're listed on the form too. So, we have everything all detailed out. Okay. And then again, of course, if there's any questions on that, we tried to catch everything in there. But if there's anything, please reach out before signing and everything. Always, again, for each step of the way, if you have a question on something you're not sure, don't hit submit or sign on anything until you ask.
Right.
Okay.
Correct.
Because it really bogs down the process when we have to go back and redo things only because you hit submit on something that could have gone 1 or 2 ways. You asked the question after, but you already clicked the wrong button. It's so much easier if we look at it ahead of time. So much easier.
Right. And we will be asking a lot of the same questions over and over again. And unfortunately, they all need to be answered. So, if we need 5 different uploads of that driver's license, of course, you could save the same PDF, but we need those uploads because that entity needs to match whatever we're uploading again. So Unfortunately, the way that the process is we need to double and triple verify that information is accurate. and matches whatever LLC or entity that it involves in. So it's going to be very tedious.
And we're obligated to ask for each one. So I get, yeah, you might upload the same driver's license a few times and in a few different tax home accounts. And you're like, why can't this just be this one? Again, it's the stringent reporting requirements. It's us doing our due diligence on a per entity, per LLC basis. What is required?
Correct.
We are ultimately, we've put together what I think is pretty cool. I'm boring accountant though, so I think this is pretty cool. I think everything that we created here is really,
I think it's cool too.
Really freaking awesome. It is streamlined things so much. It could be so much worse. I know none of this is fun. None of us want to do this. I don't want to do this for my LLCs, which I already did, by the way. I had 7 to 8, I think. See, I don't even know them off the top of my head how many I have. Had to do the same thing over and over again. And so I'm with you. Anne's with you.
Yep.
We're all going to get through this together. Unfortunately, when new regulation happens, this is just what it is. And we just got to go with it and make sure we do the best that we can. But to get back on track again, after, the signature form is signed, the invoices are paid, all that sound familiar? Should, just like tax prep. Then we will file the forms. Okay. So keep in mind, up until this point, we haven't filed, we haven't actually submitted it yet, right? So then once everything is paid and signed, that big final step, yes, these are all my LLCs. Yes, all the information is right. Then we will upload into the system where they need to be saved, file it officially. We get a little acceptance information that we can print, and then that goes into TaxDome.
And I do want to just interject, and some of you might say, oh, I'm exempt from this. I'm exempt from this. I'm going to tell you right now, you're 99.9% not exempt from
Probably
this.
not.
If you're not. You could reach out to us if you want to have an individual, question. Accounting firms are not even exempt. There's a very specific statute that allows certain accounting firms to be exempt, but this is not a I think I'm exempt type of thing.
Right.
I'm telling you, you are 99.9%, and it's the rare 0.01% of who does not need to file.
Well, and also on that note, there is some legislation out there, some court cases. Correct. Those are very specific to those individuals and entities in those court cases. So unless you are a part of one of those lawsuit filings, that doesn't apply to you, because I know that's a big hot thing. Again, this is why we pushed it off. We tried to wait until closer to the end of the year, kind of hoping that maybe this would go away. If any of those ended up applying on a broad scale, unfortunately, that didn't pan out. So again, there are always rare situations where one might be exempt, but what we're seeing overall, and after the research that we've done, is that majority of folks are required to file. And again, of course, if you are pretty sure you think that you've got a situation where you're exempt, or we're looking through stuff and we determine that, we of course will let you know. And of course, if you're exempt, we'll make sure that you got everything, all your ducks in a row, everything lined up.
And just to go into it, even if you are exempt, you might still want to file too, because you can't go away from penalties if you do the right thing and file, right? So if you do the right thing and file, you're avoiding jail time, and it's better to just be in compliance than to sit there and try to argue saying, I don't need to file because of this, X, Y, and Z, because once again, this is the wild, wild west. This is brand new. We do not know what the law is going to do at the end, and how stringent and how you're even going to know that did you file or you didn't file. We don't even know that. This is brand new, and we're going to see what happens next year, but it's just better to be in compliance, than to go ahead and beg for forgiveness.
Absolutely.
So what is the deposit? Once again, we're going back to it. The deposit is $550. This is the cost of the BOI report with 5 or fewer filers. So
one LLC, one filing with 5 or few filers. When we say filers, we're talking about the owners, the beneficial
Correct.
owners. Yeah.
Okay. So once again, we're going to have annual maintenance because we are going to be partnering with you to make sure that everything is up to date. So each year we're going to be sending you a questionnaire to make sure that you have updated information. And we've already spoken about this, your driver's license, did you move, anything that changes, that you had a name change or anything like that. The CEO that was the beneficial owner, stepped down. We need to now change that. It's important that we get that information and make sure that we file timely. The questionnaire will be due on November 15th of the same year. This is a quarterly maintenance fee of $75 a quarter, and it will be charged and collected via ACH draft. This is for anything that has 5 or fewer filers. A $10 a quarter fee will be incurred for each additional beneficial owner over 5. So if you have 6 beneficial owners, that fee is now going to be $85 a quarter. If you have 9, so on and so forth, it goes up. Our professional fee for the service outlined above is estimated to be $550. So this is, once again, just like your tax return, you put the $250 deposit down. This is going to be a $550 initial filing fee. We think the most of everybody will be captured in this $550 filing fee. So we will not have to go back and issue a second invoice. But once again, if you end up having more than 5 beneficial owners, then yes, we will have to go back and there will be something that is due before we can file the final report. But once again, you're going to have to approve the report. So you're going to see what is going to be submitted. You're going to approve it before you get that final deposit, if there is anything more. A $100 fee will be incurred for additional beneficial owner of over 5. So if you have another owner, that will be another $100 fee. If you have 2, that would be $200, so on and so forth.
So just to kind of summarize, the initial deposit is the base cost. So let's say you had one LLC and you had less than 5 owners, that cost the $550. Anything else is a kind of an add-on. So the deposit invoice is targeted to be a catch-all. So let's say you're in that situation and that's all it is. Deposit invoice will cover it. Any remaining invoice would be for there's additional beyond that. So let's say you had, 6 owners, your deposit invoice would be that $550. And then with the final bill, there would be the additional $100 for the additional owner. So if you want to kind of do the math, get your LLC and, first 5 members free, kind of included in that. For each additional one, it's $100, each additional one. And then of course that annual maintenance. So the annual maintenance, this is just this is for upkeep. This is for us, reaching out, doing our due diligence to reach out. And all of this is required. It's a full package deal. Okay. So basically there will be ACH once a quarter for the $75 per reporting
5 or
entity.
under.
Okay. For 5 or under.
Correct.
And there's an additional $10 for each additional owner over 5. So again, if there's any questions on this, reach out. Okay. And, we can work through and really talk you through that estimate so that you really, truly, fully have a grasp on what the cost is and all that.
I do want to interject. Once again, you're the first line. You're the one that's the responsible party. That entity is the responsible party. So if you uploaded a driver's license and you renewed your driver's license, you need to make sure that you reach out to us because that's not going to be something that we're going to automatically know. So we will be happy to update it. We're going to definitely try to make sure we're going to send out yearly reminders. But, once again, if you move and you decide to close up shop and you move, Catherine or I are not necessarily going to know that you moved. So the onus is still going to be on you to make sure that you get us that accurate information within that 30-day window to timely file and to accurately file. That is key.
Absolutely. Thank you guys so much for coming, for being a part of this. Again, if you have any questions, please reach out to either of us, whichever one of us is your CPA, and we can get everything straight. Again, we plan early next week to start the process. We're going to drop everybody into the BOI process, which means you will be getting that initial questionnaire where please, if you don't have any, please go ahead and fill it out saying that you don't. Okay.
Correct.
It will take less than 5 minutes to do that. It's designed to be real quick. That helps us know we don't have to bug you anymore, all that kind of stuff.
Correct.
So.
This is supposed to be a catch-all. We're trying to make sure that you're going to avoid those penalties. You're going to avoid all those jail time if you have to have it.
Absolutely.
Okay. Well, thank you, Catherine. I appreciate your time.
Yeah, thank you. And thank you guys so much for joining us today.